Traders checking in on the stock market today. So the bulls continued their complete control, led by some major tech names, Facebook, Google, Microsoft, all hitting all-time highs. We saw the shift in momentum mid last week. We ended the week with that bull momentum, and now we're starting this week with that bull momentum. We're definitely overextended on some names and scouting some healthy consolidation. We'll be looking for daily higher lows, and I'll show you which names are most extended with some 3 gap up bearish reversal patterns to be watching. So the S&P 500 12-hour time frame, certainly the bulls could not have hoped for any better follow-through on that cup and handle. Blue sky breakout, tons of space for a daily higher low. We have not seen daily consolidation in 7 days. We're becoming due for it. Last time on this bounce, we had 3, 6, 9 days, 8 days before daily consolidation started, and we've now got 7 days. So again, healthy consolidation is going to be due here in the near term. It's not going to be surprising when it happens. And there's tons of space for daily higher lows. The strongest names will be watching for hourly oversold conditions to help potentially indicate daily higher low entries. So names like Facebook, Google, Microsoft, the names that are hitting all-time highs, those are now back burner trades, which we've talked about a lot in the past. After a massive bull move, you scout first hourly oversold conditions, especially when looking for a daily higher low. SPY is going to be in the same boat. We're going to be watching SPY for first hourly oversold conditions when we're looking for a daily higher low. The Nasdaq futures chart. So again, the shift was on last Tuesday. Bear break with no follow through, straight into a massive bull move. And here we are 2% plus from the all-time high. QQQ has a 3 gap up bearish reversal pattern. So the pattern confirms on the 4th day. If you get a bearish day on the 4th day, a red day, that confirms the 3 gap up bearish reversal pattern. For me, all it means is we're really overextended. We're due for some healthy consolidation. So that's what we're keeping an eye on now. And rather than watching the hourly uptrend, which you can definitely do, I prefer the Nasdaq futures 4-hour uptrend. It's just very clear. Overnight last night, we set a 4-hour higher low. Big bull move all day today. We can pull back over 1.5% overnight tonight and still be in a 4-hour uptrend. So that's what I'm watching as my short-term guide. Speaking of guides, look at QQQ in the 5-minute EMA 12 support today. It was just perfection. We held it at the open. We held it again. We held it again 4, 5, 6 times. When it was finally lost, that was the most opportunity the bears had all day. It certainly wasn't significant opportunity, but a little bit of a day trade, just knowing that we were due for hourly consolidation and just keeping it very simple. If the bulls are holding 5-minute EMA 12 support, they are keeping absolute complete control. And then once that support level broke, we ended up seeing not much downside, but a nice little 70 cents to the downside, and it's an hourly higher low. So again, 4-hour uptrend is my guide on these futures charts. IWM had a 3rd gap up open today. Although actually I take that back, looks like yesterday, I should say Thursday, was not quite a gap up open. Either way, I'm watching 234.53, the all-time high, as the most important resistance level. And when we lose the hourly uptrend, which could potentially be tomorrow, if we fail the high of today and break the low of today, that's a confirmed hourly downtrend, which means zoom out and scout a daily higher low, anything above 213.14. That all-time high resistance is still a ways away, and if you condense it to the 2-day time frame, I wouldn't be surprised if this would be one of the sectors where we see a tightening range form, because the bulls still have a bit of a ways to go before we would get to that all-time high, and we've already significantly bounced at this point. That resistance is 4 to 5% away, and off of that recent low, we're already up 8%. XLF, all-time high in play, 35.29. That's the only resistance after the high of today of 34.91. Daily little higher lows. So the most important short-term support for me is now 34. If 34 is holding, the bulls have complete control of the daily chart. We would have to essentially fail the all-time high, lose the daily higher lows, and fade back towards 33 for there to be any kind of red flags. That would essentially just be a weekly bull flag rejecting. But right now, it's a weekly bull flag. So again, the bulls are very much in control of the broader market. And we ended last week saying the burden of proof is on the bears in most places. There are some places where the burden of proof is still on the bulls, and that's the Biden names. It's the EV, the solar, and the MJ sector, which are all still bearishly correlated to QQQ. But other than those little subsectors, which don't have a huge impact on the broader market as a whole, the bulls have complete control. So again, looking for bearish clues is not the way to trade a bull market. It's saying, I am bullish until X, Y, or Z happens. I am bullish until all of our major sectors are at the low of the day at the same time. I am bullish until I see over the 20-day average daily volume heavily favoring bears. Because in the absence of those things, bulls keep the control. XLV, trying to be a daily bull flag, high or low established, 116.02. Bulls would need to break 117.25. Nope, it's 117.97 to confirm it. Solid day today for the bulls, and we'll see if we get that bull break. And if we do, the all-time high is going to be right there. So the daily uptrend intact on the healthcare sector. The biotech sector is a sector that still needs the bulls to prove it. We are well below the March high, and the fact that we dropped to a lower low under the March low initially is showing us that it's weaker than most sectors. So decent bounce off the lows, absolutely. Nice percentage gains inside bar today. When we lose the pattern of a higher low each day, the top of the bounce is set, and it's then up to the bulls to confirm a daily trend change, because again, there are names out there like XBI that have not confirmed a daily higher low and higher high at any point since the all-time high. So this is a name where the burden of proof is on the bulls. You have to change the daily trend to prove to me a clear shift in momentum. So bears are looking at this name and scouting a potential entry in the short term, because if the broader market were to consolidate, the biotech sector is still one of the weaker sectors comparatively. Semiconductors, we know, has been stronger than QQQ, and here is SMH at the all-time high, 258.59, the only resistance level after the high of today. Again, extended 3-gap up pattern, but still an hourly uptrend. And as long as the bulls hold the low of today, they keep complete control. When we lose the hourly uptrend, plenty of space to be scouting a daily high or low. And again, a name that has bounced this significantly, we'll be watching for first hourly oversold conditions for bulls to be buying that dip. TAN is still weak. The bulls have to prove it here. We've already started daily consolidation. So again, when a sector is red on a day where the broader market is one of the strongest days it's seen in a long time, it stands out to us. So bulls have to hold 81.07 and break 94.24 to confirm the daily trend change in a meaningful way. And again, condense it to the 2-day time frame. Low, high, higher low, lower high. Bulls must hold 81.07 to remain in this tightening equilibrium. MSOS, daily inside bar, but here's another sector where the bulls must prove it. We know we're just looking to top out on this bounce, and it will then be up to the bulls to follow through with a confirmed daily trend change. And if they don't, then the bulls don't prove anything, and we're still looking at monthly consolidation underway. Essentially, we have to see rotation back into these Biden names, because if we don't, they're going to stay weaker than the broader market. The VIX went up today while the market went up. A lot of people on Twitter will be looking at this and saying it's a clue. The market's about to dump. The VIX going up when the market's going up. We're about to dump. When in reality, a lot of people are hedging because everybody's looking at this market and saying, wow, we're really overextended after this massive 4-day bull move. I really like where my account is at right now. I'm going to grab a little bit of the volatility sector to offset any kind of pullback that we see from here. So it's a daily inside bar today. If we get bounce follow through, I'm looking at the daily lower high of 21.80. And again, we're not going to see any kind of big move in the volatility index unless all of our major sectors, financial, healthcare, tech sector, all at the lows at the same time. Can't remember the last time that's happened for a day. It's happened fairly recently within the past couple of weeks for like an hour. But as far as it happening for a day, I guess I can just look at this chart and it will tell me. It happened back in early March. The dollar pulling back. So it's still a potential daily bull flag, but we're starting to get to the retracement size where that becomes a little bit less likely. Still holding the 382, or let's see, I haven't looked. Now we just broke it. So just now getting into the gray area, pretty much 382 to 50% retracement is the gray area where it's still possible we see continuation, but again, the odds are increasing now that a tightening range becomes more likely. So anything above 91.30 is still a daily higher low, but once we set that higher low, we'll be watching for the possibility of a lower high to form compared to 93.44, keeping in mind that we are at monthly EMA resistance and we are in a monthly downtrend. If we lose the daily uptrend from here, odds increase a bit that a monthly lower high has been set. The metals bulls are a bit disappointed on a big red day for the dollar. They're not taking advantage of it. They're holding their gains from the end of last week, but the metals are names where the burden of proof is on the bulls. You have to prove to me a daily trend change or the bears are going to keep control. Gold has to get over 1756. Doesn't have to do it right now. It's possible that we reject from that level. Then we have to hold the low and then do it. But if we don't get over 1756, it's just a bounce and a downtrend. And silver is the same. Daily EMA 12 resistance, just looking for a daily lower high and have to set up the daily trend change. Bulls definitely want more follow through to try and create the space for that trend change to shape up. 4-hour uptrend is our guide on these metals, and they are still holding these 4-hour higher lows at this point. Bull breaks with a lack of follow through on both of them, but still holding the higher lows. Miners trying to get up to 34.48 because that will be a notable break. That will be bulls proving it with a weekly trend change for the first time in a while, in months. And again, the miners are a bit stronger than the metals right now because the broader market is so strong. And these companies are trading on the broader market on different exchanges here. So they do have some bullish correlation with the broader market. And the best case scenario for the miners is when metals and the market is going up at the same time, which is why they enjoyed a very bullish last Wednesday and Thursday to close out the week. Oil failed the daily trend change. So we had a pullback, high of the bounce, higher low, failed resistance, failed the daily trend change, and then a break of support. So we're still looking at 57.25, but we do not have a weekly higher low set. It looked close to setting it, but a little bit iffy still. If 57.25 breaks, the bears are going to keep their control, and at that point, we're going to zoom out and scout a monthly higher low. So short-term bears keeping control with the lower high, and we'll see how long the daily lower highs remain. Natural gas weekly bear flag odds increase significantly to start the week. We're looking down at 2452 as support. Big red day today, and we're coming right up on that support. Held it by 1.5 pennies so far. We would have to hold that level or break it with zero follow through straight into a resistance break of 2655. But right now, bears are confident in natural gas. They've been confident all last week because the entire bounce attempt last week didn't prove anything. So who still needs to prove it? Biotech, solar, EV, MJ. That's who needs to prove it. Everybody else is looking extremely strong. And the bears have to prove it with everybody else. So congrats to the big tech bulls out there. I will be watching the potential that we continue to tighten up on these EV names. Tesla is much closer to breaking resistance than names like NIO. But if the broader market were to see even one day of consolidation tomorrow, our lower high is going to be set. And then we're going to be looking for a higher low and a continued tightening range. I'd like to see that happen. Having no swing position right now, that leads to the best opportunity when the tightening range clearly breaks. So that's what I want to see happen. And we'll see how it shapes up. So, bulls are hedging. We know daily consolidation will be inevitable. We're going to be looking for daily higher lows in most cases. The burden of proof for bears, they will have to show up with notable bear volume, with all of our major sectors hitting their lows at the same time. In the absence of that, we're going to be watching for continued rotation. And we'll take it one day at a time as always. Again, people will ask me all the time, what are you looking at 2 months out? If you had to pick this or this over the next 2 months, which would you do? And there's just absolutely no reason to do that. If I was about to go on vacation with no internet for 2 months, then maybe I would do that. But I literally get information on an hourly and daily basis. And to paint myself into a corner making any kind of prediction when I don't have to, and when the information is going to potentially cause me to change my mind at any point in time, I just don't understand the longer term, months out predictions. I much prefer the here and the now. One day at a time. Keeping bigger picture in mind, we didn't take our mind off of Tesla looking for a monthly higher low to be the result of that fear. We knew the monthly higher low was very likely, but one day at a time to see that monthly higher low trying to shape up. Have a good rest of your day. Do good things. Man, I got a lot of duck stories. I could talk for 10 minutes about the fascinating social interactions of duck couples. It's been a very informative weekend, but we'll save that for another time, and I'll see you tomorrow. The mulching has begun. You can see all my pots and row covers that I had covering everything during the freeze. Most everything survived. Some stuff got damaged. That's the rhubarb that got pretty beat up. But over the next couple of days, this is going to look a lot better. Some of the frost damage, which hurts the flowers the most. Magnolia flowers cut short. Who's that?